The QE2, what's that? It's got 11 decks, 1,000 crew, takes 2,000 passengers.
Rolls-Royce engines.
Yes. No, we're actually talking about quantitative easing round 2 from the Federal Reserve.
Yeah, lots of moaning from the tinfoil hat brigade about this being the debasement of the dollar, blah, blah, blah. But, we know they're at zero or close to zero with interest rates. They know that inflation is not a problem. The Fed has already expanded its balance sheet, so they're indicating that they want to do a little bit more of that. $600 billion against the backdrop of a $15 trillion economy. I don't know. Sounds quite sensible to me.
But what are they looking to do? By lowering interest rates for those people with equity in their mortgage and who would refinance then. And that would stimulate what? Growth of sorts. And also shunt people out of owning treasuries with much lower yields into corporate bonds and into equities. And that would stimulate the economy, right?
So all of that, if you read the Washington Post editorial comment which Bernanke wrote, it explains all of this. They believe at the margin it will stimulate greater economic activity, encourage risk-taking behavior, as you say, lower consumers' costs in terms of borrowing as well as mortgages critically.
And plus there's also a positive impact because if a weaker dollar would be good for US exporters, right?
Yeah, the currency effects I'm not so sure of. I mean, everybody's talking about this as the principal reason for the weak dollar, but at the same time, we know that there's lots of growth in emerging markets. So people are moving money into sovereign bonds and into investment opportunities.
They're selling their dollars to buy like Malaysian ringgits or something like that.
Yeah, so to say that this debasement of the dollar is the principal reason for the relatively soft dollar. Also, as we've learned over the years, weak today, strong tomorrow. Currencies, who knows? The dollar will be back.
And how does this impact our market here today? I mean, or does it have any effect? I mean, doesn't this mean that commodity prices on balance will continue to appreciate, both soft and hard commodities? And that's good for us, right?
Look, again, there are those that think this is the worst idea ever, and that's the beginning of, the US turning into Zimbabwe, and that Ben Bernanke's no better than Gideon Gono, etc., etc. But I think what's much more likely is the Fed does this. Over time, as the emerging markets continue to grow and the US and other markets continue to recover, there'll be an opportunity for the Fed to effectively run those assets back into the market and quieten down their particular balance sheet.
So lower their balance sheet where it was to pre-crisis levels.
And for me, the bigger issue driving our market is the question of how our companies in aggregate are addressing their economic opportunity. We know Billiton's higher today because of the fall through of this potash deal, but in the long term, consumption and demand of all their physical products very strong out of Asia, all the rest of the stuff.
So, markets around the world that are cheering this news in the short run, I mean, to us it's net neutral really because of our mindset and our longer term thinking.
Yeah, and we don't see this as a disaster. We just think this is another thing that Bernanke's doing and that it's well advised and not, the negative that some people are sketching it as.
There you go, QE2, not a ship.